Check. All right. Sorry about that, guys. All right. How's everything going? Hope everybody is having a good weekend so far. We're going to break down everything that went on in the market this week, as we do every single week. We finally got that pullback that we've been looking for. Everyone's been talking about it for a long, long time. And now the question is, how bad is this going to be? Is this going to be the start of a bear market, or is this just some healthy market action that we've all been looking for? So without further ado, let's get into the rapid review. All right, so getting started, market direction. We are in an uptrend, and the power trend is still intact. Looking at distribution days, we currently have 4 distribution days on the S&P and 1 distribution day on the NASDAQ. So looking at the distribution day tracker, 2 distribution days were gained on the S&P. You can see that on that was one on the 29th and one on the 31st. So those are both days we were down on volume, showing institutional selling coming into the market, therefore adding to our count. We also lost 2 distribution days on the NASDAQ. So we actually lost the July 1st and July 7th distribution day. And that was due to price action. We rose 5% above the close of that distribution day, making it no longer valid for our count. What you will see, though, is we also did add a stalling day this week that did not count towards the count, but as you can see in the yellow, is just sitting there pending. So we were working to break towards new highs. We reversed, closed lower, giving us a stall day, but as per the market school rules, does not count towards our count. So that's what gives us the 4 days on the S&P and the 1 day on the NASDAQ. Looking at the week, big down week, biggest down week we've seen in a long time. Down 2.36% on the S&P, down 2.17% on the NASDAQ, and down 2.92% on the Dow. So still in the green for the year. You can see the S&P up 6.06%, NASDAQ up 6.94%, and the Dow up 2.45% for the year. But this week gave up some of those gains that we were starting to really accumulate week after week on the indexes. In terms of the year, NASDAQ still leading out the year, still being the strongest. This week, it was definitely the leader down the least, which was interesting because we started seeing like the S&P was looking stronger for a little bit, but then now the S&P looking a little bit weaker. So just interesting to see the back and forth and who was leading out the week, but overall the NASDAQ still being the strongest. Looking at the moving averages, and this is the big thing that we'll talk about, especially when we get over to the charts. We broke below the 10 and the 21 day on both the S&P, the NASDAQ, the Dow, and the Russell broke below all of its moving averages. We had talked about every single week how important that 21-day EMA is for the overall trend, especially for most swing traders and many position traders in terms of the overall uptrend. So seeing that actually get broken is something that we really want to pay attention to. Does not necessarily mean that this is over, does not say we sell all of our stocks, but it's something that is a key indicator that should bring our attention to what's going on in the market. And we'll talk about some of those key levels now when we jump over to the indexes. So let's do that now. Let's take a look at the NASDAQ as we always do. We'll look at that on the daily first. All right, so zoom in a little bit for you guys, and we'll start off looking at the week. So if you look, pretty flat day on Monday, and then Tuesday we came in here and we looked to make new highs. Pretty strong start to the day. You can see we kind of gapped up in the morning, but we reversed and we came down lower for the day, which was a pretty poor signal. Honestly, expected the next day to maybe follow that trend, and we kind of did intraday, but we found support at that 10-day, and then we closed pretty much flat for the day, barely up 0.15%. So saw some real good support at the 10-day, very positive action there. Then on Thursday, powerful gap up in the day. We jumped up, as you can see, really big gap up in the morning. But the big thing Thursday, we knew we had to kind of see really what was going on with a lot of the earnings and the Fed and all that stuff that was going on. And you can see we kind of reversed, but still found support at that 10-day simple moving average. But what was very interesting was Friday, and a lot of the job reports, things that came out on Friday, we gapped down. And not only did we gap down, but we actually went through the 21-day EMA. And this was one of those areas where we really would have liked to see support, or if we did break, we would have liked to seen us break back above it. But as you can see, we broke and we closed lower underneath that 21-day EMA, and having really the first significant pullback that we have had in this uptrend pretty much in the whole time. I think a lot of people got really, really shook, not only with the reversal that we had on Thursday, but just with the then gap down on Friday. And it was really, really alarming. But when you think about it, with the strength that we have gone up in, having some sort of pullback was really, really expected. And it was kind of wanted in some ways for the people who might have missed getting into some stocks, looking for some sort of a pullback, some sort of a setup to get into some of these big leaders. So everybody's been talking about this, that this is kind of what we were expecting to happen eventually, and we did finally get it. So now the question becomes, are we doomed? Is this the end, or is this just a healthy pullback? And the answer to that is we don't really truly know yet. So we're looking at the key levels right now. We want to see how we interact with this 21-day going into next week. We still have earnings going on. Last week was one of the bigger weeks for earnings, but in general, we still have a lot of earnings coming out. So we'll see how that kind of affects the market. But let's see how we handle this. Do we just take this quick dip, shake some people out, and then bounce right back above and continue the trend higher? Do we trade a little tight around that 21, go a little sideways, shake some more people out, and then recover? Or do we just continue down lower? And do we go towards the prior highs of 1216 and also the 50-day simple moving average and see how we interact around that level? So for right now, look, it's definitely a expected pullback like we've all been saying, but it doesn't necessarily mean this uptrend is over. What really is going to tell us what's going on is really how we interact next week and what goes on in terms of, do we go lower, do we bounce higher, do we go sideways? And that'll give us a little more context as to what kind of situation we're really, really, truly dealing with. We'll look at the weekly, and you can see, here's our big uptrend. Here's our pullback. Like I said, the biggest pullback we've had really in a long, long time. And even volume, pretty big decline on some decent volume as well. Last time we saw this amount of volume was over here, going back towards the beginning of June, and that wasn't even that big of a decline. That was only a 0.63 decline. This was a down week of 2.17%. But again, key levels, downside, we're looking at really the 1216 high, the 50 SMA. I would say the key level, we're not even up or down, is just how we interact with the 21. And then above, we're looking at the 10-day simple moving average and the prior high from Thursday, if we can get back above there and continue this trend higher. We'll look at the S&P. S&P, not really much else to say. Very, very similar action. You can almost see it's identical. And we're also below the 21. The key levels are pretty much the same, except the high is from February 19th that we were looking at, that prior high, versus the level we were looking at on the NASDAQ was going back to last December. Other than that, everything else is pretty much identical. The key price levels are identical. Definitely a little weaker action in terms of the selling that looked like it was coming in, the higher volume, stuff like that. But not much else to say. And then there's your weekly. Take a look at that. So let's take a look now. We'll jump over to Deepvue, and let's take a look at the theme tracker. So looking at Friday, home construction, this has definitely been an industry group that we've seen a lot of strength in this home construction area. Curious if that has to do with the fact that we are not lowering interest rates. So you got a lot of people locked into homes, which means that a lot of people that have bought at low interest rates aren't selling, which means there's a high demand for real estate and homes, and construction in many areas of the country is booming to fill that increased demand. So could be why that we're seeing that, but interesting to see that continue to be pretty strong. But that was just Friday. Throughout the week, look, everything kind of got hit. It was pretty broad-based hit on the market, as we saw both the S&P, the NASDAQ, and the Dow and the Russell all get hit. And that shows here in the industry groups as well, minus the utilities being the only positive. And for the 1 month tracker, this is where I really like to focus. I think the big thing we're seeing here, growth stocks still performing well overall. Bitcoin, big talk of the town. Definitely seeing a ton of biotech stuff. Pharmaceuticals tend to be doing well. We talked about the home construction. The casinos, this one right here, really seeing this continue to show up in strength too. So keeping an eye on that. And as always, semiconductors and AI, two groups that I think everybody's really truly watching. So that's what we're seeing in terms of the strength now. And then year to date, we're seeing the miners still continue to lead out the year in terms of overall strength from year to date. All right, so from here, let's talk exposure levels, right? That's what everybody wants to know. How invested should I be in this market? What should my selling and buying plan, considering what's going on in the overall market? How should I address going into next week? That 21 EMA, it is so important in my eyes. That's going to tell us a little bit more. What goes on next week is going to be a big tell to see, is this a market where we really got to start taking a ton of profit? Or is this a market where we can maybe sit back and give our stocks a little bit more room to breathe, to see if we could just get healthy pullbacks and then continue the uptrend? But it's still a little too early to tell. We're at that level right now where we just have to see which way the market goes from here. The big thing that I will say, trust your stops. A lot of people trade in different time frames. They're going to have different trailing stops that they use, and it's important to trust those stops. I myself will tell you, I blew that rule. I owned the stock Credo. It pulled and dipped below the 21-day EMA not too long ago, and I got shook. I sold on the intraday break, and the stock simply rebounded, closed above the 21, and now has continued higher. And I made a profit, but I still got stopped out of it because I did a little bit of emotional selling. However, a lot of the other stocks I'm holding right now, they did it again this week. They intraday broke below the 21. They rebounded. They all closed above the 21-day EMA, and they all still look like they're in a healthy uptrend. So I learned my lesson on Credo, carried it over, and was able to not get stopped out of my current positions that are working fairly well. So if this market is going to continue, most likely those stocks are going to hold those stops, and they'll continue higher. And that's why it's important to have those rules. But if I do get that close below the 21-day EMA, I'll take my profits and I'll sit back and wait for new setups to happen. Also important to remember, partial selling is an option. If you do feel like you're in one of those positions where you're concerned on should you take the loss because it's a mild loss, or but it didn't really hit your stop, or maybe you have a ton of profit, your position's gotten kind of big and you're not sure, do I hold on to this? Do I take some profits? I don't know what to do. Partial selling is always a good opportunity to just take some money out of the market, take some profits off, and give yourself a little bit easier position to work with to maybe follow that overall trend. So keep that in mind. So, final thoughts. One of the things I wanted to actually share, which we're going to go back over. Let's go back over and look at the indexes. Is this market is very close to what we saw back in 2020. Reason I say this is multiple things, and I've referenced this a couple times before. We had that extremely rapid pullback, right? V-shape type of pullback, V-shape type of recovery. We got that type of lockout rally that everybody talks about, where if you didn't get in early in that uptrend, it became a little difficult to get into some of those leaders because they just kept running and never gave those alternative buy points. And I've talked about this before, that we barely got below the 21 when we did this last time in 2020. But what I found that was very interesting, and if we zoom in here and we look about the same time frame towards the end of July, we experienced a very similar action. We experienced a gap up, a stalling day, some flatness, and then a breakdown right through the 10 and the 21. EMA. The pullback was a little more aggressive. As you saw, it was a 5% pullback, not as aggressive as we saw. But again, this is what I'm talking about. So if I move this out of here, we can even delete that. Look how we did. We broke down, we came back up, we reclaimed that 21 EMA, and then we went on another run. And if you look at this run we went on, besides this next pullback, there's another 17% move in the market. This is a lot of money that could have been made in that market. You know, there's a lot that could have been done with some of those stocks that continued to go and up, run up all the way until the beginning of September. So, not saying this is going to repeat itself, not saying this is guaranteed to happen, but I think the important thing is understanding when you take a step back and you look in the context of things. You know, looking at this now, like this just looks like a nice, beautiful, you know, strong uptrend. And then you zoom in and you see this. And I remember what this felt like during that market. You know, sometimes it does feel like the world's ending, and then it quickly changes to back into money just becoming a thing the market's just handing out to everybody. So use this as just a kind of metric to see what this could be possibly, and really put some context into what this pullback could be, and make you not panic as much, I guess would be the big thing to say. You know, ultimately the market did turn over in September. We got a bigger correction, and then kind of went sideways for a little bit, was a little bit choppier of a market, and then we had another uptrend kind of continue from there. So just wanted to bring some context to what's going on. This was a lot worse of a pullback, and you see how it kind of reacted. So keep that in mind. Other than that, I think the big things: be comfortable with your stops, be comfortable with your exposure levels to those stops. If you can't handle your stocks all pulling back to their sell points, then your positions are too big or your sell points are too far away from where the stock is right now. So make sure that you're comfortable that if I got stopped at everything, am I happy with where where my portfolio is gonna be left? And if you're not, you might have to take adjustments, or you might have to just mentally kind of check yourself. Don't be afraid to take some profits off the table. And if the market continues up without you, there'll be other opportunities and ways to put money back into the market. So look, if this is going to be a pullback, this could also be creating, well, it is a pullback, but depending on how this pullback works, this could be creating a ton of opportunity for people to either newly get into some of these leaders, or for you give a possibility to really focus on some of these leaders, some of these alternative entries, to add some more to these working positions, some of these big leaders. And now that they've kind of shown themselves as the market leaders, this could be your opportunity to get into some stocks that you missed, or to add to some of your bigger winners. So keep that in mind. Other than that, that's really all I got. Yeah, appreciate everybody joining. Sorry for the technical difficulties in the beginning. But there you go. YouTube channel, X, depending on what you're watching on. The other one's up there. Link in description. And if you want on X, just reach out to me for Discord channel. Over 1,000 members right now. A lot of really good traders, both beginners and some professional traders in there. And if you ever want to reach out, you can also reach me on my email as well. I do check that daily. So yeah. Hey, do the work this weekend. Plan for next week. Bring some context to what's going on in the market, remove some of the panic and some of the emotion, and just get ready to handle whatever the market brings to us next week. That's all I got.